Oh, great. Great. Good evening, everybody. Hope you guys are doing great. I've been waiting to see you guys. It's been a great weekend. Hope you guys had a great weekend. Welcome to yet another live trading session with myself, Isaac Izy, your host for the day, the guy that will be guiding you throughout your trading journey. Hope you guys had a great weekend. Welcome. I see as we are waiting for more people to come in. Do let me know how your weekend was. And do let me know how your trading week was last week. How was your trading week last week? If you are in the Telegram channel, our Telegram channel, have you had any opportunity to take some of the trades that we sent out? Have you been profitable? Do let us know as we're waiting for more people to come. All right. All right. Hope you guys are good. All right. Invite your friends. I'll give you guys a couple of minutes to share this on your social media, share it on your WhatsApp, share it on your Instagram, share this link everywhere on every platform where you know people may need today's guidance, where people may need to learn how to trade. Let's invite them. Let's invite the people. Okay. I'll ask you that you please excuse me today. I'm not feeling my very best. However, the show must go on. Welcome. I see people are coming in. All right. Before we proceed, I would just like to give out a disclaimer that any opinion, any news research, prices, analysis, or any other information discussed in this webinar or linked to this presentation is provided as general market commentary and does not constitute as investment advice. If you do seek any investment advice, any financial advice, please do make sure that you speak to a regulated entity or a regulated key individual by the regulatory body in the country that you are in. If you are in South Africa, please make sure that the person or the individual or the company that's giving you this information is under supervision and is regulated by the FSCA. All right. Now that we got that out of the way, let's get on to the business of the day. Welcome to everyone that is here. Welcome. Do let me know where you are tuning in from. Do let me know which country you are tuning in from. Do let me know which city you are tuning in from. Whether you're a beginner, you're an intermediate, you're an advanced trader, let me know. Let me know in the comment section. And as we go on, let us engage. I'd like to see some dollar emojis in the comment section. I'd love to see some fire emojis in the comment section. Let's get this thing heated up. All right. And as usual, at the end of the session, you will receive a special promo code, that will double your deposit. All right. You'll get 100% deposit bonus after you've deposited. So if you deposit $5,000 or $10,000, you will get another 100%. All right. So it means if you put in 10,000, you will get another 10,000. So your margin will be, or your balance will be 20,000. All right. Stay tuned till the end of this session. All right. Let's keep it moving. All right. I see we have South Africa, South in the motherland. We have Jane Strauss all the way from Namibia. Where in Namibia are you from? We have Sia all the way from South Africa. Let's see some dollar emojis. Let's see some fire emojis. We got Mr. Bright tuning in from Johannesburg. All right. So yeah, guys, let's get on to the business of the day. For those of you that are here for the first time, welcome. It is an honor, it is a privilege, it is very nice. I am honored and pleasured to meet you, and hopefully this is not our first time together. We're gonna be together continuously. So, is it continuously or continually? Some of us didn't really, we were not listening in class, but it's okay. Let me give you a bit of an introduction of who I am. My name is Isaac Izy. I'm a professional Forex trader with a decade of experience, and over the years, we have trained over 5,000 traders in the Forex market, and we've held over 300 Forex seminars throughout the Southern African region, in Namibia, in Botswana, and our passion is to teach and train individuals to become professional traders and to succeed financially and holistically. All right. I am excited to have you today, and I promise you that by the end of this session, you are going to leave here with more information. You are going to leave here with a refined information. You're going to leave this webinar here with a different outlook on the market. And I do hope that as of today, your entries are going to improve. How you view the market is going to improve. And holistically, you are just going to become a better trader. That is what I want for you at the end of this session. So stay tuned with me. Let's take this ride together to the future. All right. For those of you, okay, let me skip that one. All right, let's skip that one. Okay, let's get right into it. I've noticed that most of the time we get stuck on many things that we end up not finishing our presentation. So today I would like us to delve right straight into price cycle. I want us to look at what we call the first candle of the day, and then we're going to use the two, and then we're going to show you how you can master your entries in Forex trading. Are you ready? If you are ready to enhance and refine your entry strategy, give me some fire emojis, give me some dot emojis, give me some dollar emojis in the comment section and say, Easy, I am ready. Say, Easy, I am ready. I'm ready to refine my trading strategy and to get better entries. They call me Agent 45. I'm a sniper in the market. That's what I do. So I'm going to be showing you how to get those sniper entries. And I can tell you it's not easy, but it's simple. Not easy, but it's simple. It's simplified. I've simplified it in such a way that I can explain it to a 5-year-old and they will definitely understand what I am saying. So I hope you guys are ready. Let's get right into it. All right, let's move on. So let's discuss price cycle. I want you to take out your notes, start writing, and come back to this session over and over again until you know it like the palm of your hand. That's what I want you to do. All right, and if you do have any questions, please put the questions in the comment section and I will be answering your questions as we go through. But you can, and we're also going to have a Q&A session at the end of the session, and hopefully we can get some entries today, and then so we leave here, we have some trades running, and then we can hold them overnight. All right, I hope your accounts are ready. I hope you funded your accounts. But yeah, let's keep it moving. Let's put it crack-a-lacking. Let's go. All right, now like I said, we're going to discuss how you can use these three concepts. There's three concepts that I want to teach you today. I want to teach you price cycle, and I've touched on this before, so if you've been here, bear with me. All right, I'm going to teach you how you can use understanding price cycle, right? Also with what we call the first candle of the day strategy. All right, using that with key levels. If you're not familiar with key levels, it means it's your first time here. Do not worry, just go on the Octa YouTube channel. Look at my webinars. I have taught on key levels from the beginning all to the end. I've went deep down into it. So make sure that you do understand that, get that. But keep coming. I'm going to redo that session one more time in the coming few weeks. All right. So let's go. One thing that I want you guys to understand, all right? We in business now. All right. We are in business now. One thing I want you guys to understand is that price generally moves in 4 cycles. All right. Price generally moves in 4 cycles or 4 phases. All right. Whenever the market is moving, it's in one of these 4 phases. Whenever the market moves, it's in one of these 4 phases. All right. And we're going to discuss all 4 phases. All right. Once you understand this, you understand the blueprint of the market. So when you know which phase you are in, you already know what's the next phase that's coming, and you know where you're going to take your entries. Are you with me? Are we together? When you know which phase the market is in, it's easier then for you to know what's coming next. All right. So like I said, the market moves in these four phases, and I'm going to show you examples on the chart. All right. Now let's talk consolidation phase. Most of you know what a consolidation is, or what we call a ranging market. All right. Or when the market is moving sideways. This is when price is ranging between two prices. All right. Price is moving sideways. The market is neither bullish nor is bearish. There is an indecision between the bulls and the bears. When we say bulls and bears, we just basically means buyers and sellers. The bulls are the buyers, the bears are the sellers. Okay, so when price is moving between these two prices, all right, we say the market is in a consolidation phase. It means the market is neither going up or it's neither going down. There is an indecision. The buyers and the sellers haven't taken a decision whether they're going to push the market up or they're going to push the market down. That's the first phase that you need to understand, all right? And immediately after the consolidation phase, you will have the next phase, which we call the expansion phase, or what we call the breakout phase, all right? Stay with me. The breakout phase, like I said, this is the foundation of everything that we're going to be discussing today. So when price moves quickly from a level of equilibrium, it's when price breaks out of a consolidation. All right. The expansion phase is when price breaks out of a consolidation. All right. And by equilibrium, I basically mean the midpoint of that consolidation. All right. The middle of that consolidation. And I say this will usually happen near or at a will happen on or near a key level. All right, please pay attention. Please pay attention. Key levels, like I said, it's your tens, 50s, hundreds, 500s, and thousands. All right, and I'll explain to you when we get to the charts what I mean by that. But the expansion phase is breakout of the consolidation. What happens is that once you have a consolidation, market is going to break out either to the upside or to the downside. That's not when you enter, unless if you're at risk, you want risk entries like myself, and which I'm going to explain after explain this, you can enter here, but there are certain things that you need to look at, all right, such as price action. Are you at the key level? All right, so you can take that risk entry. There is confluence that you need to use, and by confluence, I just basically means a combination of different confirmations. That's English. A confirmation. What? A combination of different confirmations. All right. So after the consolidation phase, we'll have the expansion phase or the breakout phase. That's when the market is breaking out of the consolidation area. And number three, what you want to see happening is you want to see what we call the retracement phase. This is when price pulls back inside the recently created price range. What is a price range, you may ask me? The price range is the expansion outside of the consolidation area, and I'll explain in more detail. So after I explain this, we're going to get into the practicals. Then I will show you this is a consolidation, this was the expansion, this is the retracement, and so forth. This is when price pulls back to fill in any inefficiency to allow both buyers and sellers fair opportunity to liquidate the market. This is when the market reverses back to just rebalance price action. All right. After the pullback, the market will continue in the intended direction. So that means if we were in a consolidation and the market broke to the upside, all right, so what we want to see is the market expanding, going to the upside, then coming back to that area of consolidation to rebalance price action, or what you can call a retracement. Market retraces back to that area of consolidation. You want to be taking your entries at key levels or at the equilibrium level, or at the midpoint. That's where you want to start looking at where your entries are going to be. And I'm going to show you, once you catch that snapper entry, to boo ha 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 ha, I'm telling you, you're gone. All right. So after the retracement phase, what happens? This is where now you want to enter. This is the most important phase for you as a trader, because this is a confirmation phase. We have the reversal phase. This is where you take your entries. This is where the magic happens, and I'm going to show you. When price moves in the opposite direction from what current market direction was moving in, all right? So if the retracement was now in a downtrend, it means the market will go to the upside. If it was in a if the retracement was going up, then the markets will now start going down. All right, the aim of the reversal is to seek for any liquidity and take out the liquidity such as trendline liquidity, equal highs and equal lows. Are you guys still with me? Are you guys still with me? If you're still with me, say Isaac, we understand you, and give me some dollar emojis because you're about to make that money. So right now what we're going to do is we're going to move to the charts. Okay, I'm gonna open a charts here. I'm gonna open the charts here, and then we're gonna look at a few different all right, let's just quickly let's go on a 5-minute chart so we can be able to spot many of these consolidations. All right, so we can let's see. All right, so right now what I want us to do is I'm going to we're going to do what? We're going to go and look at what we just discussed right now. So we're going to look at a consolidation, we're going to look at an expansion, we're going to look at I want one that's more clearer, more clearer, all right, that's more clearer. Let's see from current market. This one there works. Let's see. There was a bit of manipulation. It will confuse you a bit, so I don't want you to look at that. But okay, all right, let's look at this. Let's look at this area over here. All right, although it's not as clear, we will look at another one for the sake of time. Let's look at that area over there. All right, that was the area. This is where we had a bit of a consolidation over here. All right, bit of a consolidation. Let me just remove that because just over here there. All right, we had a bit of a consolidation over there. We had a bit of a fake out there, and then the market went down, came back up, and then eventually went down again. All right, do you guys see that? Had a bit of a consolidation over here. All right, consolidation area, market broke out. All right, now what is our midpoint? All right, our midpoint is over there. All right, market broke out to the downside, came back up again. So now we have our mini consolidation there. As much as I'm not happy with that consolidation over there, because of time, this is the only one that I'm seeing where we have all 4 phases happening at the same time. So we will call this our consolidation phase. All right, we're gonna look for another one. But I just want to show you something, how the market moves, right? Especially now at the consolidation phase, what do we see? We see the market moving. You see exactly that's the midpoint. Remember equilibrium? I said equilibrium. That is the midpoint of that consolidation. Exactly from there, the market expands to the downside. All right. So now this is what we call our expansion phase, or the breakout of what you call the breakout of the consolidation area. All right, now the market dropped all the way to about this price over there. All right, we're gonna put a horizontal line so we see where we are. Do you guys see that? So we had a consolidation, market broke all the way down to this side. So now if you wanted to take a trade, a risk entry, you would have taken it here. All right, but now because you are a patient person, you want to wait. All right, you want to wait for price to confirm that it's gonna go down. What happens is after the expansion phase, what we said will happen after the expansion phase is what we call the retracement phase. All right, the retracement phase. This is the retracement phase. All right, so we broke out, went down, market retraced a bit back to the equilibrium. Let me just write it there and say equilibrium. So that's the midpoint of our consolidation, equilibrium. All right, equilibrium. And see what happened there. Immediately when the market retraced back to the equilibrium, exactly at the equilibrium, what happened? Bingo, the market fell all the way down. All right, you see, now that's where I said you're gonna take your entries. That's the reversal phase. All right, this is why I said you need to take your entries here around this zone. So there's three prices where you should: the high of that consolidation, the low of that consolidation, that zone. That's where you want to be taking your entries. All right, now you see that's a sniper entry. Do you see that sniper entry over there with no drawdown at all? But here's another trick. What you want to do is you want to look at your equilibrium and say, what is my nearest key level? Your nearest key level in this case is 37,800. That is our nearest key level over there. This is basically where you want to confirm your trades. Exactly here. All right. Yes, this is on US 30. This is on US 30 on a 5-minute chart, 5-minute time frame. All right. This is where you want to be taking initially your entry. But because we had that equilibrium there, you could have taken it there. All right. If you took it here, you have a bit of a drawdown there of about 30 points. But also you can see that exactly at the equilibrium, you could have taken your snapper entry over there. Then the market, what did the market do? Bingo, went all the way down and you caught your snapper entry. Do you guys see that? All right, you guys see that? You can also use the 28. No, not this one. This one, yes, that one. You can also use the 10s there, but I don't prefer 10s, all right? I prefer 50s. So you see 37820. So I'll prefer 37850, I'll prefer 37800, or I'll prefer 37900. That's where I'd like us to take our entries. But as we can see, either way, whether you're taking your trade there or your trade there, or exactly at the equilibrium, the midpoint of that consolidation there, you would have had your sniper entry. Do you guys understand that? If you understand, give me some fire emojis. Let's move on to the next one so I can show you how we now use the two as confluences, and then how you can get your sniper entries as well. Let me know if you understand in the comment section. Let me know if you have any questions. I'll give you guys a minute to bring all the questions in. Ask me any questions, anything that you don't understand. Please let me know in the comment section. Let me know. I am waiting. If you do understand, give me some fire emojis. Give me some fire emojis. Give me fire emojis. Fire emojis. There's fire emojis in the building. All right, no questions. Now what we go, like I said, this is a blueprint. All right, let's look at another one. I feel we should look at another one. Here's another one over here. We have an area of consolidation over here. Now this is for a buy. All right, we have an area of consolidation over there. All right, we have an area of consolidation over here. You guys see that market is just literally ranging, or you can either use this area, but I'm using this one because that's where it already started. All right, or you can either use this one over here. Let's just use this one to not cause confusion. All right, you guys see that? So now what we want to do is, this is our consolidation area. Consolidation. Consolidation phase. The market is just ranging between two prices, and remember this is on a 5-minute chart time frame, so you can get a lot of these opportunities throughout the day. All right, just using this concept alone, price cycle. All right, this phases. However, it's important that we note not to just use one thing. We need a confluence of at least a minimum of three confirmations, all right, before you can take your entries. All right, so now we see that, so I'm just gonna use this over there and then put it at the middle. This is the middle of that consolidation there. All right, and my nearest key level there, you see it's at exactly at 3755. Let's use 37550. All right, so it's exactly at the key level, right? You guys see that? Cool. So now what happens is market breaks out. We have our expansion phase. You have our expansion phase over there. What did we say the expansion is? The breakout, the breakout, the breakout of the consolidation area. That's what the expansion phase is. And after that, what do we want to see? We want to see market reversing back to that area of consolidation. We want to see a retracement. We want to see a retracement phase going back. Someone is asking me how do key levels work. Okay, I'll get to it right now. I'll explain to it in more detail. All right, so we see a retracement over there, starting there, going all the way down, and after the retracement, what we want to look for, this is where now we want to be taking our entries. Okay, first let me do this. Let me say this is our equilibrium. Equilibrium, remember, is just the midpoint of our consolidation, just the middle point of our consolidation, which happens near or at a key level, and I explain the key levels right now. And exactly now we see the market coming back exactly into that key level, over into that consolidation over then we have our reversal, and this is where we take our buy entries, right? This is where now we take our what? Our buy entries. We take our buy entries over there. Okay, maybe let me just use an arrow up. This is where we take our entries. All right, this is our equilibrium. This is where now we took our entries at the level of equilibrium. All right, do you guys understand that you took your entries? You probably put your TP at that high over there, all right, or at the nearest 100, which is your 36700, and see what happens. Bingo, market went all the way up from your entry, which was 37550. That's about 150 points. Bingo. On a 0.01, that's almost 2.5 grand. All right, do you guys see that? Do you guys see that? Do you guys have any questions? Do you see we did one for a sell, we did one for a buy? We can look at, there's a lot of time where the market will do the same thing. A little bit over there, we see the same thing, and market doing pretty much the same thing, going all the way down. Do you guys see that? So do you guys have any questions? You guys have any questions? Any questions? How do key levels work? Okay, I want you to look at this side. This side of the chart is what we call price, right? That's what we call price, right? Price is at this side, and then over here you have date, and then here you have data. So it's data, price, or your candlesticks, price, and what you call, and date. Let me write it down so maybe you take a screenshot. There are a few things that you need to understand. One is market is equals to buyers and sellers meeting. Buyers and sellers midpoint. That's point number one, right? Point number one is that the market, whether it's a Forex market, whether it's the car market, whether it's whatever market, all right, for as long as it's a market, this is a place where buyers and sellers meet. Number two is the common, the most important thing in the market is price, right? The most important thing in the market is what? Is price. And why do I say that? Because whether you're a buyer or a seller, at the end of the day, there's going to be a price factor, all right? So it's either you want to know how much am I buying for or how much am I selling for, all right? Are you guys with me? It's either you want to know how much you're going to buy for or how much you're going to sell for, all right? That's what we call price. This is the most important thing in the market, all right? Now, every seller or every buyer, they want to know how much am I going to buy for? Is this video going to be on a YouTube channel? Say yes immediately after this live video. After this webinar, this video will be here, will be saved here, so you can always come back and go through it again. All right, the most important thing, I said, the most important thing in the market is price. And also, please do join our Telegram channel where you can get more of this information, where you can get free signals and more educational content, trading psychology tips, risk management tips, and so forth. All right, so number one, we said the market is what? Where buyers and sellers meet. Number two is the most important thing in the market is price. All right, and so number three is that whenever people buy, all right, whenever people see the price of something, is they tend to round off the price, all right? So let me call it round number bias, all right? I'll explain to you what I mean. It's a round number bias. So right now, if I ask you, if you go to the store right now and you see something for 990, what you would say is that this thing costs 1,000 rand or $1,000. If you go to the market and you see something selling for 460 or 470, you will round off to the nearest 100, all right? Or you will round off to the nearest 10, or you will round off to the nearest 1,000. Does it make sense? All right, so people tend to round off to the nearest 10, to the nearest 100, or to the nearest 1,000. All right, that's what we call the round number bias. This happens in everywhere, in every aspect of our lives. If you see a car selling for 490,000, you would say the car is selling for 500,000. You've rounded off to the nearest 100,000. All right, so even in the market is like that. Whenever buyers or the big whales, all right, or what you guys call the market makers, the people that come in with large volumes of money into the market and dictate the direction of the market, what they do is they don't look at US 30 like this and they start looking for variations, they start looking for engulfings, they start looking for rejections and whatnot. No, what they do is they look at price. Okay, fine, we want to buy the US 30 market or the Dow Jones market at price what? The nearest price, or the nearest, let's see there. All right, you see it's exactly at 37260. All right, 37260. Do you see that? That's if you can see 37260. Or let me rather do this. Let me do 37300. Let me use hundreds. I want you to see something. Look at that. All right. So when the market makers say we're going to buy the US 30 market at $37,300, all right, this is where they put their large orders. Obviously, there will be a bit of manipulation over there. If you go on a smaller time frame, you'll also see, like I showed you, that this was rounded off to the nearest 10th, all right, 3260. That's a 10. All right, look at that. That's a sniper entry right there. All right, look at that. Rejected exactly at 37300. Look at that. You could have taken your entry over there. All right, so that's what the round numbers are about. So we can go let's go 37400, and I want you to see something. 37400. All right, look at that. What did the market do? What did the market do? Whenever price reaches these levels, there will be a bit of a reaction from the market, because this is where the big whales place their orders. Do you guys understand that? Do you guys understand how key levels work? This will work on every. We can go 3-7. You can go back into history, go place them. We can go 3-7 500. All right, look at that reaction, look at that reaction, look at that reaction. We can go 3-7 600. We can go 3-7 600. All right, 3-7 600. See, look at that. You guys see that? So this is also where you want to plan to take your so you want to start thinking like this, investors. You want to start thinking like big words. If I had so much money of volume, do you think I want to be looking at 5 minutes candlesticks? No, I want to know what is the price of that thing. Look at that sniper entry over there. Look at that sniper entry over there. All right, I want to see. Look at that. Just look at that. How will I know that the market? Look at that. Look at that. You know, see, even in the future, no, that was 700, 00. You go to the past, you go to the future, you'll find the same thing over and over. You see, market is playing around the same area over and over again. Do you guys see that? Does it make sense? Does it make sense to you guys? Look at that. Look at those sniper entries you'll be getting just by using the key levels. All right, are you guys with me? Do you have any questions regarding the key level, Mr. Say Fundamental? And also, if you're trading fundamentals, go and back test this. Look at where your big economic, your NFP, your CPI. Look at where they reject, or where, like, just look at what is the price. You will see that they reject him exactly at these key levels. I'm sorry guys to be drinking this. I need a bit of sugar to increase my sugar levels. I need a bit of sugar and a bit of energy. As I told you in the beginning that I'm not very feeling good today. All right. So do we understand each other? Do we understand price cycle? We also understand we also understand the key levels. Can I continue? If I can continue, please give me fire emojis, dollar emojis in the comment section so I can continue to this one that I want to give you now. No, it's also a killer. It's a killer. All right, it's a killer. So make sure that you stay tuned for that. Let me know in the comment section. Fire emojis, dollar emojis. Then I move on to the next one. All right. I don't see anything in the comment section. I'll assume you guys understand, so let's move on. So now what I want us to look at is what I call the confirmation or the first candlestick of the day. The first candlestick of the day. How many hours candlesticks are we looking at? You can either do 5 minutes. This is let's quickly go back to the charts. Let's go back to the charts. So I can go on a daily time frame. See, whenever I've placed you can go on a 4-hour. This just depends on your strategy, but at the end of the day, price will reverse at these prices. It doesn't matter on which time frame. Do you guys see that? This is on a 4-hour time frame. Although I place this on a 5-minute, it doesn't matter. Price remains the same. Price remains the same. All right? Price remains the same. Okay? You can go on a 1-minute time frame if you wish to. Can go on a 1-minute time frame. I can show you right now. If I place this line here without even looking, I can tell you we are near or close to a key level over there. All right, 3140. That's 10th. Look at that. Do you guys see that? Do you guys see that? 38140. I can check here without even knowing. I will tell you it's exactly at a key level. Why? Because big traders, they buy at these key levels. All right, 38,000. Okay, that's 38,000. Look at that. Look at that. Look at what happened at 38,000. All right, let's look at that one. It's 30. It's what, 39. 39,950. See, look at that. 39,950. Do you guys see that? Huh? Do you guys see that? It's on every. I can come here and check. I'll tell you, this is where the market reversed. It's near a key level. Look at that. Would you look at that? 37900. You see, it's near that. All right, and this is even on a 1 minute time frame. You guys see that? So the market will reverse near or at the key levels. All right, near or at the key levels. That's where big reversals happen. All right, this is where big reversals happen. Look at that. 37460. Do you guys see that? Ah, man, come on. Whenever the market reaches these levels, there will be a, there will be a reaction from the market. All right, we have about 15 minutes left, so let's go to the first candlestick of the day. So now we understand key levels, right? We understand price cycles. So what I want us to do is, you're going to go onto your chart, especially if maybe let's look at US30 still. Let's look at US30, all right? So what we're going to do is, you want to plot out the first 1 hour candlestick of the day. So firstly, what you need to know is, use these things. You can press Control Y. You see Control Y. Control Y gives you what we call period separators, or you can just quickly go to properties and say show period separators. Do you see show period separators? And then okay, and then you have that. So what you want to do is, you want to take your rectangle and cover your first candlestick of the day. All right, and I'm going to show you why. So usually what the market will do is, the market will break out of the first candlestick of the day. It will come back and test that candlestick, and then it will take direction, kind of like the consolidation. All right, so we see the market went out, came played in here, and then it shot all the way up. This was today. All right, now let's look at yesterday. No, not yesterday. Today is Monday. Let's look at Friday. This was Friday. First candlestick of the day, the first 1 hour candlestick of the day. Do you guys see that? Then I draw that over there. Market manipulated a bit there, but broke out, came back, tested that level over there, shot all the way up. All right, now let's look at this day, Thursday. That was last week, Thursday. All right, let's look at that. So now on the next session, I'm going to explain to you how to understand accumulations and manipulations and so forth. All right, so we see there the market played around. There was a bit of a manipulation there, but eventually what did the market do? Exactly from our first hour candlestick of the day, the market took direction and shot all the way up. All right, also, you don't use this alone. You need to know whether the market is selling, whether the market is buying, before you can even decide, okay, I'm going to take a sell or a buy. So that's why I said you use this with confluence with every other thing. So first hour candlestick of the day, the market broke out, came back, tested it, and shot all the way down. We see it over here as well. All right, we see it over here as well. Market broke out, came back, tested that level over there, and shot all the way down. You can do this, go as far as last year, go as far as 2 years ago. I can just quickly go anywhere in the charts, and then first hour candlestick of the day, pretty much the same thing will happen. Look at that. Market broke out, came back up, shot all the way down, shot all the way up. Same thing over here. All right, market broke out, came back, shot all the way up. Same thing over there. All right, Market broke out first to the first hour candlestick of the day, came back here and shot all the way up. Look at that. Isn't that amazing? Isn't that amazing? Now imagine using this strategy together with price cycle. Look at that. Market broke out, tested that area, shot all the way down. Isn't that beautiful? We can go back anywhere, any year you want. Let's look at this year. So the idea here is the market will always come and test its open of the day. All right. The market will always come back to test its open of the day. All good? All right. Now I want to show you something over and above this. All right. So let's look at the one that we used, the ones that we've highlighted. I want you to place your key levels. What's your key level? 37900. Look at that. Look at that. Would you look at that? We have our first hour candlestick of the day. We have our key level 37900. Look at that. Now, if you use this two, you take your entry at your key level because we've already discussed that this is where we take our entries. Isn't that a snapper entry? Snapper entry to the upside. If you're using just normal price action, the market broke that level over there, came back to test that, got all the way up. You go on a smaller time frame. Let's go on a 5-minute time frame and look at what price action we could have used over here to what is this thing? To buy, to get into this trade today. All right. Let's look at that now. Okay, let's wait on the first hour candlestick of the day. So what we want to do is we can see a consolidation here. All right. We have a bit of a consolidation over there. Market broke out, came back to test that price over there, and then shot all the way up. All right. Are you guys with me? Oh, good. Come on, guys. Come on, guys. Talk to me. Look at that. Look at that. Look at that. Look at the market broke out of that consolidation, expansion, retracement, reversal. You take your snapper entry. Bingo. Let's see. Key level. What's our key level? Look at that. 37470. That's our midpoint of the consolidation. Market came back, tested that area, shot all the way up. Isn't that amazing? Isn't that amazing? Over here you have a bit of a you have what is this thing, a double bottom over there, market shooting up, testing that area over there and going all the way up. You have a change of direction. They're confirming that the market is shooting up. Do you guys have any questions, man? So we understood price cycle, so consolidation. We understood expansion, retracement, reversal, all right? And after that, we understood key levels, all right? How to use price cycle with key levels. Now we understand the first candle of the day, how to use these three together with price action. Isn't that amazing, guys? Isn't that amazing? Look at all the snapper entries you would have taken. Hey guys, talk to me. I say, do you guys have any questions? Do you guys have any questions? Look at those snapper entries you would have taken over there. Nice. I don't see any questions in the comment section. I'm new. How do we set our stop losses and take profit? You set your stop losses and take profit at the key levels, all right? Epignosis on a higher level. Nice one, Mr. Bright. Nice one, Mr. Bright. Nice one. I can see you read the Bible, sir. God bless you. God bless you. All right. So do you guys You use the key levels as your TPs, all right? So you can see, for instance, from this one here, you could have used 37900 as your take profit, all right? You see? So from here, let's look at what key level was here when you took the sell. 370. You took your sell there, 370. In your nearest key level, you will probably want to, that's 370, you probably want to look at 37300. Let's see. 37300, that was your next 100 over there. All right, so from there, 100 points, a whole 100 points short all the way down. You look at 37200. Look at 37200. That's another 100 points over there. All right, that's another. See, from there you have about 70, 100 and about 170 points for your TP, but you got yourself a nice sniper entry over there. All right, so guys, please do me a favor. There is a link here to the Telegram channel. Please click the link. Please click the link to the Telegram channel. Give us your review of today, US30 strategy, right? This works on US30. You can use it on gold. You can use it. It works on every on every pair. But obviously, like I said, pairs behave differently, so you want to look at, I know, especially the first hour candlestick of the day. Let's quickly go to gold. Let's go to gold. Let's quickly go to gold. Let's go to our 1 hour candlestick, 1 hour chart. All right, this is our 1 hour chart. First candlestick of the day. Market broke out, came back to test that, shot all the way down. This was on Friday. On Friday, a bit of manipulation over there. Market broke out, came back there, and went all the way up. This was on Thursday. Market broke out, came back to test, and shot all the way up. First candlestick of the day. Market broke out, came back to test that, and shot all the way down. Do you guys see that? It works on every pair. So what I would like you guys to do for me, please do this for me, right? There is Mr. Moderator, can we please get the link for the Telegram channel before we leave? Let's get the link to the Telegram channel. Please join the Telegram channel. What I want you to do is please go comment on the last post and give me the review of today's session. The reason for that is that I need to understand where you guys are in your trading journey, right? Once I understand, so I know what to prepare for you, all right? So I don't prepare beginners content and then I have people that already know what I'm talking about. I want to prepare something that doesn't waste my time and something that doesn't waste your time. So please make sure that you give me a review of everything, how you feel about this whole thing. What do you think I should teach more on? What is it that you'd like to learn more on? So I come and give you the content that you need. So make sure that you click the link to the Telegram channel, go to the Telegram channel and give us a review of today's session. All right, that's it from me today. Please come and rewatch this again. Watch this again. All right, watch this again. Watch this again. All right, please come and watch this again. All right. And then, as I promised you guys, that I'm going to give you a promo code at the end of this session to get your 100% bonus when you open your trading account with Octa. Please make sure that you click on the link and register your trading account with Octa Fund. Let's trade together. Join the Telegram channel. I send signals in there. I send educational content in there. Use the promo code Isaac Edu to get 100% deposit bonus. You just open your Octa trading app or visit the official website, go to your profile, find the promo code section, enter the promo code and press activate, make a deposit and enjoy your bonus. Let's trade with Octa. It's been an absolute pleasure having you guys here. I hope you guys enjoyed as much as I did. I hope you guys had as much fun, and I hope, most importantly, I hope that before 7 o'clock and right now at 8 o'clock, your trading has already changed. I hope you start seeing things that you haven't seen before in the market, and I really hope you're going to apply it and have a profitable week. That's it from me. I wish you guys a profitable week. More sniper entries, more take profits, no losses, more take profit, back-to-back trade profits, back-to-back trade profits. Take profits. That's it from me, guys. I really enjoyed today's session. We having another session on Thursday. 8 o'clock South African time, 8 o'clock Central African time. On Thursday, we have a webinar in the Telegram channel where we're going to be trading live as well. So make sure that you join that as well. Click the link here. Mr. Moderator, can we please get the link to the Telegram channel? Please click that link. Also, the link is on my Instagram. My Instagram is Isaac Izy. Isaac Izy. Make sure that you follow the correct one. I am verified. There is a lot of fake accounts. The one that is original is the one that has the blue check, the blue tick. All right, it's a verified account. I think I have about 105,000 followers, so make sure that you follow that. Click the link in my bio, join the Telegram channel, and we're gonna be trading live on Thursday Central African time. That's it from me to you guys. Much love. Enjoy the rest of your week. Have a blessed week. I love you.